almost there. Here it is. Heidi, how you doing? Good evening, good evening. I'm just getting here myself. Alrighty, alrighty. All right. Good evening, everyone. Wow, I'm actually that weird old guy people come and watch. Holy shit. Hey, Jacob. Anyway, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. That's all I'm asking. Not too much, at least I don't think so. No, we all have our choice. When you get to my age, I'm 61, which means I just recently retired. So I don't get Social Security. So everything I earn has to get me to 1 month at a time. Because see, when we rely on our income when we get older, because when you retire, you get two choices. You do it yourself, or you give it to someone else to do for you. So if you're giving up accountability to your own money, I don't know what you're thinking. But, hey, it is what it is. So that being said, let's get the evening started. We're going to take a look at some interesting stocks for you guys and see what do they look like. Because if it doesn't make any sense, it just doesn't make any sense. Okay, so why put your money in some place that doesn't make any sense? Chuck, what's happening? Morgan, good evening. Fruit feedy you. Okay. Razor, what's going on? Razor, cool beans. All right. What do we have? Who wants to take a look at something for Old Dog? What's happening? What do we want to look at first this evening? No? Nothing? Really? Come on. Let's take a look at Apple. It's right there. We might as well take a look at it. All right. Oops, get that darn thing out of there. All righty. Apple. Okay, here we go. Izzy, what's happening? Oak tree. Okay, so first, now anytime I look at a dividend stock chart, I'm looking at the 1-year chart. I'm looking for 5 simple things. The high right there, the low, where was it, where is it, what direction is it going? That's the overall 1-year chart. Just gives me an idea where I am. Because I don't want to be at the high and I definitely don't want to be at the low. I just want to see where it is going this week. Because I do what's called weekly options. Dividend stocks with weekly options. And as we go on, you'll see why I like dividend stocks, because they consistently increase their profits. Think about it. Why would you invest your money into a company that's not sharing the profits with you? Now, I understand some of you might be a little bit on the younger side and you want that excitement and that rush for going fast. Yep. Well, this is probably not the right place for you because I'm not looking for capital growth. I'm not looking for my stocks to go up in value. I'm looking to give weekly cash flow from them so that I get to, live a comfortable life. So, but anyway, besides the point, let's take a look at Apple and see if it makes sense. Okay. So we all know who Apple is. Now we're going to do a little bit different because today is Wednesday, which means we have 2 days left in the week. So there's only 2 days of time value in this week's options. So I'm not even going to go into them. So we're going to not even look at this week's June 18. We're going to just look at next week's because the numbers just don't make sense otherwise. You know what I mean? So if you can't get in on Monday, get on Thursday or but make sure it makes sense. All right. So Apple. Oh, we saw the movement. All right. Now, this is where we are. 210.16. So do I like it at 210.16? I don't know. Well, let's take a look. 210.16. 210 is right here. That's $3.40 a share. That's more. That's like 1.5% for 1 week. So you ask these questions like, do I like Apple? Is it the right time to buy Apple? Look where it is. That's just the 1 year. Well, let's zoom in and see a little bit closer because this is great for a 1-year chart, but that's not what I'm doing. I'm not investing for yearly income. I'm investing for weekly income, so I don't need to see the whole year. I just want to look into here, right? What's happening now. So let's go to the last 30 days because the last 30 days gives me a good idea. 16, right there. Okay, here we go. It gives me a good idea of what the company should be doing next because the stocks move in a predictable pattern. They go up, they go down, they go up, they go down, they go up, they go down. That's all they do. So where is it right now? Well, She went up, here's the high, she came down a little bit, back up, back down. Well, now she's going to the upside. It doesn't look that way, but it's higher highs and higher lows. Well, not today, but still the bodies are going to the upside. And if you take a look at the seasonality for Apple, what does Apple normally do this time of year? Now, this time of year, what is that? Okay. Okay, for those of you who don't know what a seasonality chart is, you got January 1st way over here to the left, December 31st right here. This represents the whole year. The blue line is what the stock's doing now. The red line represents what the stock normally does on average over the last 10 years. It's called seasonality. Winter, spring, summer, fall, the seasons. How do the seasons, and it sounds kind of weird, but if you think about it, Apple has a tendency to go up right up until September and then pull back. Now that's 10 years worth of data. That's 2000, don't get old, it's no fun. 2005, 2006, 2007, 2008, 2009. Wait, that's 20. Anyway, for the last 10 years, 2015, there you go, 2015, 2016, 2017, 2018, so on and so forth. Okay, so is it consistently profitable? Is it consistently going up? Yeah, based on the seasonality, because this time of year, it goes up normally. So that's a good sign. Is it guaranteed? No, but what I want is the odds going in my favor. So if you think about it, the house always makes the money, that scenario. Well, with stock options, 80% of them always expire worthless. So why would I think about buying them? I want to sell them because it's safer and I'm on the 80% side. So if I know that, well, that's in my favor, great. What else can I put in my favor? Well, how about a simple strategy where the stock doesn't have to move at all? It's called a covered call. It's one of the safest trading strategies there is. So if I buy, listen to this, if I buy Apple at 210 tomorrow morning, I can sell it to someone else for 210 and pick up this little payment right there. It's kind of like a favor. Hey, you want to cut in line? Great. Grease my palm. Well, there it is right there. $3.40 per share. Now that's over 1.5%. I know it's not exciting at all, but think about it. 1% every single week. Well, that's doubling your money by the end of the year. I know it sounds a little confusing because you've never seen it before, but you've never seen the inside of an automobile either. At what point in your life? One point in your life, the first time you have sat behind the wheel of an automobile. It's that new, it's that foreign, it's that, but eventually you'll learn and you'll understand because you only got two choices. Do it yourself or give up the responsibility, let someone else do it. I mean, you can do whatever you want. I'm just showing you what I'm doing. All right. So it's kind of like a happy coincidence because I'm creating a video diary for my kids and my grandkids. So I know that in 20, 30 years, I ain't going to be here. But 20, 30 years from now, hopefully when they're watching my videos, hi guys, that they will see what did I do to get where I got. So kind of like paving the future. It's kind of like a little game I'm playing in my head with my kids, and they don't know that they're unwilling participants because as they progress, they're going to be often referring back to these videos because if they don't know how to properly use money and be responsible for it, they're not getting any inheritance. It's an evil, twisted game I'm playing with them. So because when I got nothing when I was poor growing up. Seriously, I was. I didn't know I was poor until the kids in class reminded me or told me, that's a good one. They enlightened me that I was dirty. That's poor. There was 6 of us in a 2-bedroom home. It was interesting growing up back in the 60s. But anyway, yeah. Any stereotype you can think about the 60s, that's what it was like. Anyway, besides the point. So anytime I'm going to invest, I always want all the odds in my favor. So this time of year it has a tendency to go up. Great. And if I do this trade, I'm making $3.40 per share. That's over 1.5%. Now, if I do 1.5% every single week, that's going to be over 70% by the end of the year. Can you imagine doubling your money within 14 to 16 months? That's almost unheard of. But here's the thing. This strategy came from my 9-year-old daughter. Because back in 2008, 2008, she jumped on my lap and she said, "Daddy, what are you doing?" Remember, she was 9. Back in the back in the back in the 80s and 90s, it was perfectly fine for daughters to sit on the dad's lap. What the hell's the matter with you people? Shit. Anyway, she jumped on my lap and said, "Daddy, what are you doing? Can you teach me?" So how do you teach a 9-year-old to trade stocks? Most adults don't understand it. So here's the thing. I had 5 criteria to overcome. Number 1, it had to be simple. It had to be safe, predictable, consistent, and most importantly, no way for her to lose. Now, a lot of people get on my case when I say no way for her to lose. Well, I look at it this way, okay? Coca-Cola's been making Coca-Cola for over 100 years. There's no way in God's green earth do I even have the illusion of being alive long enough to see them go out of business. I'm long gone. They're still making Coca-Cola. That's what I mean by no risk. A company that has stood the test of time is going to be here long after I'm gone. So I don't consider it a risk. Anyway, those are the companies I'm looking at. Coca-Cola, IBM, AT&T. Some of those may not be the greatest examples, but they've been around for decades, quarter of a century. Home Depot, Lowe's, Bank of America, Wells Fargo, Procter & Gamble, Colgate-Palmolive, Heinz Ketchup. These companies are part of your American heritage, part of our, and don't get me started. Let's just keep looking. Those are, what I want to say is those are the only companies I invest in because I feel safe with them. And I know it sounds boring as hell, terribly sorry, okay? This is my soapbox, okay? So this is what I'm doing to share with my children and my grandchildren, hopefully. And you guys are along for the ride. So any questions you want to ask, okay? I get 1% every single week. And I've been doing it for almost 15 years. It was awesome. Now, when she was 9, she says, "Daddy, what are you doing? Can you teach me?" So simple, safe, predictable, consistent, no way to lose. So 5 rules. Rule number 1, never buy something not on the list. Now, when I say not on the list, well, here's where you get to pick what stocks you like. Okay, so you pick which ones you like. There's over 10,000 companies in the United States. Now, I check every week to see how many, because every week they add more and more and more. Okay, so I think last week it was 10,116, and I think this week is 10,130 something. So every week they're adding more and more companies to the stock market. Well, great. Well, how do you decide which ones to invest your money in? Well, stock markets have been around for 400 years. I don't think 2 decades, 20 years of consistent profitability is a bad idea. Terribly sorry if it's not exciting. It's not. It's boring as hell, but it's consistently profitable. Anyway, and it takes less than 10 minutes. That's why you always hear me say, "Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader." Because for a 9-year-old, it had to be simple, safe, predictable, consistent, no way to lose, and get it all done in less than 10 minutes. The funny thing is, adults have a tendency to make it more complicated than it needs to be. So it was so simple, and so A plus B equals C. There you go. There's your algebra. It just works. All right, anyway, don't ask why. Canada Dry. What's that? I forget that commercial. Anyway, so Apple. Yeah, let's go back and take a look. Where are we? All right, so at 210, let's do a quick trade to show you what a covered call looks like. Okay, one thing I like about Thinkorswim is like everything's there. Just as soon as it's kind of like driving a car. And then driving a car is one thing, but then driving a stick shift, ooh, that's a big leap. Same thing. You're learning something new after you see it a couple of times. It's like, oh yeah, I get it. Oh yeah, I get it. It's not that difficult. Just don't be intimidated. All right, so the 210s. This is what we call the strike price. So if I'm buying it at 210, I'm going to sell it to someone else at 210. I'm not greedy. I don't want the stock to go up, down, or sideways. I want the insurance premium right there. Okay, that's how much you make just for letting the guy cut in line. I'm buying it at 210. Great, sell it to me at 210. Sure, fine. What are you going to give me? You're going to give me $3.20. Anyway, so let's do a couple ones. So that's the way I look at it. So if a stock is coming down in price, because that's all they do. They go up and they go down. So if it's coming down, right, it's going to hit the bottom eventually. Well, if you like the company and it's consistently profitable for at least 2 decades, it's like, all right, they go up and then they go down. Great. Well, it's coming down now. When it hits bottom, turns around, that's the time to jump in and do a covered call. Covered call is one of the safest trading strategies there is. It's so safe, they say. You can do it in your IRA. I'm Dr. Seuss. I got a 5-year-old grandson, so I get that, what do you call that? That roll going. Anyway, so let's do this. 210, right there. Now I'm just going to do one contract so you'll see, get an idea. So I don't want to do like 10, 15. It gets kind of confusing. So we can all understand one. All right. Limit order. I want to do a market order. The reason I like market orders, first thing in the morning, it automatically gets filled. And then the stock is already tied to the option. Let me explain a little bit. Hold on. Let's hit confirm and send. All right. This is the order. Okay. Buy one covered call of Apple, 100. That's the weeklies. 25, July 25. Well, that's next Friday. That means this contract, it's actually an insurance contract. It's an insurance policy. It's crazy, but it is. It's an insurance policy. For an insurance policy to be valid, it has to have a beginning date, ending date, consideration, and meeting of the minds. It's like, what am I buying? What am I selling? Blah, blah, blah. It's just a minor technicality of useless stuff you probably never used in your whole life. Anyway, so 210 against the stock AAPL at the market to open to open. Now it says to open because we're doing 2 trades at once. We're buying the stock and we're selling the option. So my profit is already built in. Do you remember the part where I said simple, safe, predictable? I know exactly what my profit's going to be before I even do the trade. Now most people just buy the stock. Well, now you have to wait for it to go up. Well, with the covered call, all I have to do is wait for Friday to come. And tell you what, the stock may not go up, it may not go down, but I can guarantee you with 100% accuracy, Friday's coming. Whether you want it to or not, it's coming. So if I could do a trade every single week and get 1% every single week, so 50%. Cool beans. I think I blabbered along enough. Wait a minute. I got a little bit more to go because we got to figure out what is the rate of return on this particular trade. I'm sure you're curious. Well, let's find out. For that, we're going to need the trusty old calculator. Here we go, calculator. Got to go from one screen to the other, buddy. Go from here. Whoops, nope. Grab you right there and bring you over to here. All right, here we go. So to find out our rate of return, we're going to need the profit. $344 per contract. So each contract you buy, that's how much you profit. Okay, so 344 is the number we're looking for. 344, and then we're going to divide that by the investment. Okay, so that's what we're doing. We're investing. So what is my rate of return? Profits divided by the investment is the rate of return. Okay, the cost of the trade, including commissions and fees, $20,656. Okay, so if you want 100 shares of Apple, that's what it's going to cost you. So let's divide it up. 20,658. And we got a grand total of 1.66%. So let's rewind this a little bit. We know who Apple is. We know what they normally do every year. We've seen the charts. Okay, we see what it normally does this time of year. And these are the numbers. If I buy it at 210 tomorrow morning, and I sell somebody the option to buy it from me at 210, and then I pick up $342, and all I got to do is wait until Friday to get here? Kinda. I'm saying kinda because you do have to look at it every once in a while and see what it's doing. It's not like, you throw it out there and it just magically comes. No, it's kind of like, think about having a garden or a pet. Okay, you got a pet, you got to feed it and water it, take it out for a walk. Well, the same things with your stocks, you got to keep your eye on them. What did I buy it for? What option did I sell against it? What's the date? What's this information? What's happening next? Because Friday's coming no matter what you do. And if I do a weekly option on Monday, it's usually going to expire on Friday. And if 80% of all options expire worthless, and I'm going on the selling side, so 80% of the time, I'm going to be right. But now I want to go a little bit above 80%. Well, what if I knew when the stock was going to move? Well, that's kind of cool, isn't it? So let's get out of this for a second. No, get out of this. Get out of that. Market watch. And here we go. Right behind me. This is an EX-dividend calendar. Now, I don't get compensated whatsoever on anything. This is free to use on Charles Schwab. Okay, it's owned by Charles Schwab. I have nothing to do with it. I've just been using it for the past 20 years. Okay, it's a long story behind the Thinkorswim. Somebody made it, they sold it, they sold it, they sold it. Now Chucky owns it. Don't get me wrong, I love using it. Anyway, so why am I pointing at this? Remember I said 80% of the time these stock options expire worthless? Great. Well, one more piece of the puzzle. What if I knew when the stock was going to move? And what if it does it predictably year after year after year? Well, right here, you see the little green dots? Oh my God, I sound like one of those late night salesmen. I can promise you, I'm not going to try to sell anything. I swear to you, I'm not going to sell you anything. Okay, we know how it works. I got shit to sell, but I'm not going to try. I'm listening to myself speak, and it's like, holy cow, I sound like a late night salesman. I'm just giving the information. Trust me, I'm not asking for anything. But take a look. Each one of these little green dots represents the EX-dividend date, which means by knowing that date, well, stocks usually go up in price or up in value just before the dividend. And if the dividend is right there on the calendar, well, if I buy this one here, I make this much. And then I buy this one here, and then I make that much. Then I buy this one here. And then every single week it repeats after and after and after and after. Oh, it's freaking boring as hell. You may think it sounds exciting because it's the first time here. And you're thinking, ooh, 50% return, that's cool. It's boring as hell. Let me tell you why. These companies that you see here, they consistently pay their dividend on the first week of the quarter. Okay? 4 quarters. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July. That's where we are right now. We are in the third quarter and the third week. So, every quarter has 13 weeks. Think about it. The first week of the quarter, general dynamics, every 90 days, the first week of the quarter. Every quarter for the last 25 years. What do you think? You think they might do it again next year? I think so. So every one of these companies have been consistently profitable for at least 25 years. That's a quarter of a century. It's not my list. I didn't come up with it. Seriously, someone else came up with this. To make it onto this list, you have to have 25 years or more of consistently increasing your dividends, which is a portion of the profits coming back to us. So if we own the stocks, we get a portion of that profits. Yeah. And I'm terribly sorry, I'm not answering any of the questions tonight. We're just rattling on. My eyes aren't focusing very well. Anyway. My son Jacob was over, so I'll let you draw your own conclusions from that one. Anyway, from that, if 80% of all options expire worthless, great, I want to be on that side. Now I know when the stock usually moves because it's right there on the calendar. You can't make it any simpler than that. I mean, hey, what week is it? Oh, it's that week? Oh, that's who's doing it. It's actually that simple. And it's not my list. I'm not trying to sell you anything. And it's horrible because I sound like a salesman. Oh my God, it's terrible. Let's go a little further. All right. Now, so let's see if we get this right. 80% of all options expire worthless. So we want to be on the 80% side. Okay. We know when the stock usually goes up in value just before the EX date. We know the covered calls one of the safest trading strategies there is, and it consistently gives me 1 to 2% every single week. Well, that's freaking awesome. I don't know what the odds would be, to be totally honest with you, but I like having things that I can have control over in my favor. So great. Do I care if the stock goes up? No. Do I care if it goes sideways? No. Do I care if it goes down? Yeah, just a little bit. But remember, I'm buying it after it hits the bottom and turns around and goes back up again, because that's all they do. Think about it. They do not come to your house and take your dog for a walk. They don't rake the leaves, they don't trim the hedges, they don't even take the trash out. They go up, they go down, that's it. Up, down, and guess what? After that, up, down, up, down. Oh, wait a minute. Up, down, yeah, that's all they do. You take a look from the beginning of the stock market to today. That's all they do. They go up and they go down. They do not come to the house and, wash the dishes. Okay, that's it. That's it, and that's all. All right, anyway. So, number one, come up with a good list. The list that I like: dividend kings, dividend aristocrats, dividend champions, dividend contenders. And then for the fun of it, let's throw in Warren Buffett's list. If it's good enough for Warren, it's good enough for me. Okay? Then, once you have your list, you can add whatever you want. Take away whatever you want. It's your list. Do what you want with it. And it's free. You don't have to pay for it. It's free. Anyway, take a list of your stocks and throw it into a calendar. You can go to Google and say EX-dividend calendar 2025. And boom, a whole bunch of different companies will offer it to you for free for your email address if you sign up with them. But it's free to use, so why not use the information that's out there? Okay, so the EX-dividend calendar tells me when the stock's going to go. And then the covered call, there's literally hundreds of videos to tell you what a covered call is and how to use it. You're basically buying the stock first, and then you're selling it to someone else through a contract saying, hey, I promise to buy this from you at this price by this date. That's all it is. It just, you learn the game. It's just like, your first time behind the wheel of driving a car. Then your first time behind the wheel of a car that's a standard. Okay? Then try being in a different country. You learn pretty damn quick. It ain't that difficult. It's just one next thing you learned. Okay, I'm 61, trust me. You're going to learn something every year, every month, if you want to. You just got to want to. Because you got two choices, and only two choices. And don't think you're special, because you ain't. Two choices. Learn to do it yourself, give up accountability, and give it to someone else to do for you. But I can almost guarantee nobody has more interest in your money than you. And the last thing you should be doing is listening to some idiot on YouTube or TikTok. What the hell do I know? I'm just looking at the numbers. I'm just looking at facts. That's all I'm doing. And I'm just sharing what I got. I have what do you call it? A belief, a calling. It's like, I believe I should share what I know before my time's up. And plus the video diary for the kids. Guys, but that type of thing. Anyway, so let's see what kind of questions we have, because I've been ignoring all the questions. Terribly sorry, guys. I've been ignoring all the questions. I get on a rant and just get going. Just let you know Jacob was over. That's it. Anyone ever tell you you resemble Fauci? Oh, God, that's an insult and a half. Totally understand grandson exhaustion. No, it wasn't my grandson. That's my son. The fun one. Anyway, Alan, how's it going? Cool beans. Okay, what did I miss? My little rant showing you how simple and easy it is. Well, how simple and easy it should be. Why people make things complicated is beyond me. Joe Dell, what's happening? Chuck, what's going on? All right. Hey, James. Old dog, what's going on? All right. Sorry, I'm going through all the questions I missed. Joe D wants to take a look at SCHD. I got a sinking pit in my stomach. Sinking pit in my stomach. All right, Joe, I'm going to show you this. SCHD. I got to catch my breath. This is going to be a good one. All right, SCHD. Okay. Schwab U.S. Dividend Equity ETF, electronically traded fund. And don't give me any crap about that what do you call that? Electronically traded fund? Yeah. It's electronically traded fund. You're giving your money to a computer. Face the facts. You are. Anyway, that wasn't what I was talking about. What we're looking at here is Yahoo Finance. More specifically, we're looking at the dividends history. How profitable is this company? Now, the reason why I'm going to the dividend history is because as the profits increase, the dividends increase. So hypothetically speaking, if I go back to the very first dividend and watch year after year after year after year, it's not that difficult. I can get someone in third grade to figure that one out. 1, 2, 7, 9, 11, 15, 20, so on and so forth. The numbers get higher and higher and higher. It's actually that simple. So we're here looking at Yahoo Finance, okay, at SCHD. Now, this is just my opinion, okay? Don't listen to a word I say. What the hell do I know? I'm just reading the numbers. That's it, okay? So the very first dividend they paid was in 2012. That's only 13 years. That's not 20. That's number one. Hold on. It gets worse. Okay, very first dividend, 4.6. Then it goes to 6.8, 8.6, 8.3. Well, there's a red flag right there. It went down one time. But wait, it gets worse. 8.2, that's down again. 8.4, 9.9, 9.9, 10, 13, 10. Wait a minute, that's backwards. That's backwards. Right, 10, 14, 11, 16, 14, backwards again. But I'm not going to keep doing that. That's what it does. It goes up, it goes down, it goes up, it goes down. But hold on, it kind of gets worse. Sorry. So we're going to come over here and take a look at the summary. Okay, the summary gives me an idea of a little bit more information. Now, I can dive really deep into the information, but let's just summarize it. You know, just the highlights, the key points. So come on and load. I got a new computer today. So I'm excited. We take it to the computer dude and have him switch all the information. Hey, I'm not very good with technology. I know a few things. That's about it. What the hell am I looking at? SCHD summary. Yes. Look at this. We are now into July, the third week of July. Look at the performance. 3.97. 3.97. What's the yield? The total. Year-to-date daily total return. Negative 1.58. So, terribly sorry. I don't like SCHD. Can you look at EXPD? What is EXPD? EXPD. Ooh. Sometimes I feel bad for not knowing all of them. You know, but there are over 10,000 stocks. And I always think to myself, why would I bother looking at something that I'm probably never going to trade? That's weird, isn't it? 10,000 stocks, I only can concentrate on just the good ones. What a stupid idea that is. Who came up with that one? All right. Don't get old, because I forgot where I was going with that. Holy shit. Okay, so anyway, I like Apple. I do. The numbers just make sense. And Apple continuously goes up year after year after year. But you figure it out. Do you like Apple? Do you like Apple at this current price? And then here's a new one, because you've probably never done this before. Are you willing to buy Apple and sell a covered call against it every single week? It's a change in a lifestyle, which means you got to get up 10 minutes earlier. Terribly sorry, taking care of your money. So look at it this way. If you spend 10 minutes a day, because basically that's what the 10-minute trade strategy was all about. Remember, she was a 9-year-old, had to be simple, safe. Okay, so 10 minutes. And then you can just, oh my God, I do sound like a salesman. Holy shit. You figure it out. It's not that difficult. 10 minutes a day, 1% a week. Anyway, that's about all you need. I'm just here answering questions, giving you my opinion on some of the stocks you guys take a look at. So what else do we want to take a look at? SCHE. Yeah, I don't like it, Joe. Sorry. Stock has to increase 3 days. Option has to be 1% of the stock price. All right, Jojo, I'm kind of at a loss of what you mean by that. Stock has to increase 3 days. Option has to be 1% of stock price. Oh. Yep, I get it. Oh, I don't know where my mind was. It's like I was reading that. It's like, that doesn't make any sense. Now it makes sense. Yeah, anytime I want to buy a stock, I'm waiting 3 days to the upside. But that's me. That's my rule. Okay, that's for me. You got to figure out what's right for you. Okay, if I see it come down and hit a bottom, okay, well, how do I know it's not going to keep going down? Well, my rule is 2 days to the upside, and then on the third day, if it looks good to enter, then I'll get in. I mean, that's my steadfast rule, because you never know as it's falling, as it's going down. So, oh, I'm going to catch the bottom. No, most of the time people don't catch the bottom, but it is there. Somebody got that price. I don't know, someone. It wasn't me. So I never buy at the bottom. I always wait for it to bounce and go back up again. Anyway, yeah, that was that one. I don't know where my mind was. Oh, Alan wants to take a look at KHC. Option Scout. Quant is the way. I have no idea what the hell that means. TikTok Tommy. I sold a call today on Cisco. Oh, yeah, Cisco. For $7.18 for $40. Already own the stock at $12 a share. Cool beans. I am not quite sure what the question was. That sounds more like a statement, but it's cool. Am I holding XRP? No, I'm not. I mean, I post all my trades, so not all of them because I get 7 different accounts. I only share 3 of them. So you guys get to see what I'm doing in 3 of my accounts. Not all of them. Sorry. Andrew. True, I never get a buy at the bottom with gold on Canada. Okay. All right, sounds cool, but I don't do gold. Sorry. All right, more questions. Trusty, how you doing? Blockchain Bullhorn, how are you? Dupesai, okay. Verizon. Dupe wants to take a look at. It sounds like one of those songs from the 80s. Doop, 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 a shoe bear, doop, doop. Okay, what are we looking at? Holy shit. Verizon, yeah. Oh, crap, getting old sucks. All right, here we go. Check it out. The high, the low, where was it? Where is it? Check this out. Down, up, down, up, down. We're at 41.25. Well, Verizon, do you like it? Well, sure. Is it the right time? Well, I've already seen the high, the low, and the motion. Okay, great. Next, 41.25. So if I buy it at 41.25, the closest strike price is going to be either the 41 or the 41.50. Either one is paying a nice premium. Okay, the 41 is paying 95. Then you walk away with 1.5% because you're losing 25 at the top. It's a safer trade. So you have to that balance. Do I want safety or do I want profitability? This is a fine line. I mean, I'll take safety over profitability any day because unlike some of you, I don't have the luxury of being wrong. Sorry, I don't want to go back to work. I could, but I've been working since 1973. It's weird to get up in the morning and saying, aren't I supposed to be doing, no, I'm not. I'm supposed to be doing something. No, I'm not supposed to be doing anything. And it's weird. It's like, never mind. I've been like so used to being busy all my life. It's like, what do you mean I'm supposed to do nothing? It feels weird. Anyway, so Verizon, 41.28, the 41.50, which is more profitable than the 40. You remember, safety, profitability. Safety. Now, both are going to be over 1%, okay? So it's, over 1% and safety or over 1% and a little bit over. Anyway, so 71. Okay, well, yeah, that's a nice little profit. But the numbers work. Great. 1 year chart. Okay. Let's go. Let's look a little deeper. Let's look a little deeper down this rabbit hole. A year ago, we're at 41.20. The bottom of the year was in the first week in January at 37.56. The high of the year was a couple of months later, 47.48. That was back in March. All right, so that's all fine and dandy, but I want to have an idea of where it's going next. So I get two things I want to look at. One is momentum. Where's it going? It's kind of like kayaking down a river. Where's the river flowing? Well, down, up, down, up, down, up, down. Great. What usually happens here? Usually, okay, because yesterday was lower than today. So is this the bounce for going back up? Remember, I like 2 days to the upside. Well, today's one. Right there, Verizon. Bottom right there. So I have Verizon written down for me to take a look at next week, because even if I did like it for this week, I want 2 days to the upside, which means that would be in Friday. No sense buying it then. Might as well just wait till Monday. That way, on Monday's opening, it'll give me a more verifiable on Verizon. Oh, that was lame. Anyway, so do you like Verizon? Is this the right time to buy? These are all cool questions. I'll quote the great John F. Kennedy. We cannot answer the questions of tomorrow, with the knowledge we possess today. Think about it. If we knew, well, it'd kind of take the fun out of the game. So, bottomed yesterday. Today is a little higher. Great. What's going to happen tomorrow? And then Friday. And then, is that the right time to jump in Verizon? Then you got those 5 aching questions. 1, does it make sense? 2, do I like Verizon? 3, do I like Verizon at this price? 4, am I willing to hold on to it? And 5, sell covered calls every single week to get cash flow coming in. Here's an interesting way of looking at it, okay? Been chatting with a few people. So let's see if we can come up with a metaphor for you guys to understand, okay? Let's say, hypothetically speaking, I want to buy a Pepsi machine, or a rental house, or a car, a luxury car that I can rent out. A cash producing asset. Think about it that way, a cash producing asset. Well, if you buy a house, it's a lot of money you got to put up, and you got some work and all that kind of crap. And then you get your income on a monthly basis. Okay, fine. And at the end of the year, you find out how much you made. Okay, fine. Wonderful. Okay, the other stuff, the same thing. What kind of return are you getting for your money in comparison to how much effort you got to put into it? So vending machine, same thing. We pay $15,000, $20,000 for a vending machine. Great. And then you have to service it, but it gives you a return, well, almost every day or almost every week. Same thing. But you have to put all that time and effort into it. Okay? Same thing with a coffee shop or a printing shop or any other kind of place, brick and mortar place. You have to put the time and effort in. Anyway, so that being said, does it make sense? It's yes, no. Okay? Are you willing to hold on to it? So I'm looking at it for next week. That's me personally. Cool beans, looking at some of the questions. So that was Verizon. KHC, somebody wants to take a look at KHC. When you have a look, when you have stock like Nike that trades 24 hours, can it be called away after so-called hours? I believe it can. Sebastian wants to take a look at UNH. Ooh, HRL. Ooh, hold the phone, hold the phone. All right, UNH. I don't trade UNH for some strange reason. UNH. Besides the fact that they're like $300. Okay. High of the year, low of the year. Where was it? Where is it? Which way is it going? Sideways, down, sideways. Okay, now we identify where it's going. Okay, what the numbers look like. Well, it's 292. Okay, 292, the closest strike price is going to be 290, 250, right there. So if I bought it here, sold it here, what am I getting? $6 per share. That's over 2%. 2% a week is over 100% a year. Simple math. You know, it's like anything. Once you see something once or twice or three times, well, it becomes a habit and you get recognized it. And then it's simple and it's easy because you have to take one step at a time. Take a look. What's the chart look like? Well, that's the chart. Okay, what's the 5 rules? Well, 5 things we're looking for. Oh, high, low, where was it? Where is it? Where's it going? It's not that difficult. It was made for a 9-year-old. And no, I'm not going to try to sell you anything. Okay, so get that out of your head. We're all adults. We all know how it works. All right, so what else we want to take a look at? UNH. We're looking at UNH right now. Okay, UNH is looking for a new bottom. Remember what we said a little while ago? Looking for a new bottom? Well, yesterday was low. Today was lower. Hasn't found the bottom yet. Just keep your eye on it. It will tell you when it's ready. It's not that difficult. Remember, 9-year-old. You can let them know. Yeah. Hormel. HRL. Now, is that Hormel a monthly? No, it's not. It's a weekly. Okay, cool. Let's take a look. High, low is down, up, down, up, down. Ooh. What happened here? Okay. Next step. What do the numbers look like? 29.91. Come on, you can all say it with me. 30. 29.91. Okay, that's the current price. The closest strike price, 30. The 30 is going for 25. Boo. That's under 1%. How do I figure out? Well, 1%. Let me think. $30. 1% of $30 is 30 cents. Isn't that weird? You just move the decimal point over 2 places. $30, 30 cents. $150, $1.50. 1% is 1%. It's easy to understand. It's the I should say, it's the. Wait a second. I've actually taught some of these new age kids. So the illusion of the money should be 1.5%. Anyway, move the decimal point over 2 places. Anyway, all right. Can't keep picking on the younger generation. They'll be taking care of us when we get older. Another 20 years, 30 years. Anyway, so Hormel, let's zoom in a little bit closer. A year ago, 30.98. High of the year was in beginning of December, and that was 33.75. Low of the year was 27.61, and that was back at the end of February. Okay, so the last 30 days. Now, I like looking at the last 30 days because it gives me an idea of where it should go next based on buying patterns. What are the buying patterns? Look, down, up, down, up, down, up, down, up. So simple. Okay, a stock will go up. Now you count from, here's where the algebra and the math comes in. Okay? Sorry, it is what it is. It's numbers. And numbers are exact. You don't even need the numbers, you just look at it. Okay? Up, down, up, down. I mean, it is what it is, that's what it does. So here, look, it's turning around, going back up again. I mean, it's easy to see. Right, anyway, so forgot where I was. Anyway, so it's not giving me 1%. 1% of 30 would be 30 cents. But no, it's only offering 25. So no. And it's that simple. Does the chart look good? Okay, fine. Do the numbers look okay? No. So it's a no. That's a no. AVX. What the heck is? Oh, how do we view your trades? Yugo wants to view the trades. All right, hold on a second. Oh, up in the bio, whichever channel you're on, that will take you to my website, The 10MinuteTrader. Where is it? Oh, crap. What are we looking for? Oh, the trades. Yeah, all right. Ugh. Shit. Trades, weekly trade for 2025. There they are, right there. There they are. What's that, week 19? Riley, Devon Energy, U.S. Steel, Devon Energy, Kohl's, Riot, Riley, Harley Davidson, Macy's, and Alcoa. That was for the week, that week. So every week I share 3 accounts, okay? I make that public. I share 3 accounts. Okay, I need 2 years of complete trading video and audio and blah, 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 all to go with it. Okay, so we are into 1 year and 1 year and 7 months. So by the end of the year, I'll have my required 2 years, and you guys get to see it. All 2 years of being alive every single week, sharing the strategy that I'm sharing. Cool beans. Anyway, so there's all my trades right there. You were asking. AVX. What is AVX? It's never a good sign. Now, I know my strategy is kind of slow, boring, and pitiful, but when somebody asks me to look at something, I usually know whether it's going to be yes or no because I've been doing so long, and I feel bad because what the hell were you thinking when you put your money into that thing? That's usually what comes up. Usually. So AVX, never heard of it. AVX. Alt Air Rust. Nope, never heard of it. Oh, has no option. Damn it, waste of my time. Thank you. I hate that. Waste my time. Tesla calls. Okay, Black Sheep Financial. Good evening, good evening, good evening to you too. You already know, you've been here before. I don't do Tesla and I don't buy calls. Okay? Cause PMAR CVX. Let's take a look at some Chevron. Why are we looking at Chevron? CVX, Chevron. No. That was easy to see, right? It should take you 3 to 4 seconds. That's all it should take, hypothetically. Remember, there's over 10,000 different stocks, so you better get used to saying, nope, next. Nope, next. Look, right here. Up, down, you see all that kind of stuff. Let's zoom in to what's happening this week. Okay? Up, down. Up, down. She's on her way down. Now, if I really like this stock, which I do, I will take note that in about a week, maybe a week or two, that'll be ripe for the picking. So I'm going to write that down for my list for 2 weeks away. And then 2 weeks, oh, damn it, it's already on the top. Would you believe, seriously, it's at the top of my list for 3 weeks. It's already on there. Oh, well, is what it is. Okay, so there you go, Chevron. Now, I do like Chevron, I do. It's just not the right time. See, she goes up. Now, if you count from where she started right here and where she turned around, usually you get a good idea. Because if it jumps more than 10%, you could probably expect some pullback, some profit taking, retracement, whatever you want to call it. As an investor, I'm calling it for what I see it. Okay, buy low, sell high. Yep, it goes up. Take my profits, get out, and it comes back down again. I jump back in again, and then it goes back up. It's a game a lot of people play. But I do it the safer way. I don't have to wait for the stock to go up. Stocks move in 3 different directions. Up, sideways. They don't go sideways, you know what I mean? It goes up, down, and it just stays in a little tiny range. A range. It's called a range, not going sideways. Because they don't go sideways. They go up and they go down. But if they go up and down so quickly, it looks like it's going sideways. Anyway, so let's move on. I will wait another 2 weeks, take a look at it again, do the numbers make sense in 2 weeks. They just don't make sense this week. That's all. I get carried away sometimes. Remember, Jacob was up. Anyway, CVX, cool beans. All right, Caterpillar. Ooh, if you already own dividend stocks at a low price, should you do a call every week for extra? Okay, TikTok Tommy, what I'm going to tell you is it's all about the numbers and it's your choice. Okay, you own that stock. You know what you bought it for. Okay, you take a look at the strike prices. What are they offering you? Let me give you an example. If perhaps you bought Chevron at $50, well, now it's at $149, and you're trying to think, oh, what should I trade it for? Well, anything you trade for in there, it's going to have a huge, what they call intrinsic value to it, which means it already has value there because you have it at such a low price and what it is now. So you'd get a big chunk of money. but then you're selling your stock at that lower price, if that's what you want to do. Or you could just float around the I'm going to call it the line, because when you're above, it's in the money. When you're at, it's at the money. And when you're below it, it's below, out of the money. So it's in the money, at the money, and out of the money. What else do you want to call it? It's the line. Okay. So depending on where you are is going to be depending on what kind of profits you're going to make. It's kind of that simple. All right, anyway, let's keep on moving on. Caterpillar, yeah. So anyway, Tommy, whatever makes sense to you. Okay. It's your decision. It's always going to be about the numbers. If you want to hold on to the stocks, go a little out of the money. If you want to get rid of it, go in the money. Remember, the further in you go, you're taking money off the table. It's called intrinsic value. All right. That's what he's explaining. He doesn't even know what consolidation is. Oh my God. You really want to go there? Okay? I said you can call it whatever you want. Okay, appreciation, depreciation. I call it appreciation. Cash, what do you call it? Profit taking. Escalation, profit taking. It's all the exact same thing. I don't know why adults want to make things complicated. That's what he's explaining. That's not even consolidation. I'm not talking about consolidation. What you just showed. Yeah, Samuel, I get it. You want to measure brain sizes. I have no desire for that. Terribly sorry. I come from a group that's called, Gen Xers. We really don't care. Seriously. I know what it is. It's going up, it's going down, it's going up, it's going down. You want to call it whatever you want to call it, fine. I explained to a 9-year-old. To a 9-year-old, it's going up. Profit taking, it's going down. It's going up. Oh, profit taking, it's going down. You can call it whatever you want. It goes up, it goes down, it goes up, it goes down. Whatever name you want to give it, hey, you call it whatever you want to call it. For a 9-year-old, up, down, up, down. Simple. Why do adults need to complicate things? Seriously. You feel like you want to do... Let's go on to the next one. Alrighty. Boston Scientific. Okay, Kai. Was it Cal? Kai. Kai, you got to give me the ticker symbol because I have no idea who Boston Scientific is. Those are support and resistance. I know exactly what they are. Oh my God. All right. You got jammed up. Yep, whatever. All right. So, CVX next. Let's do something else. Caterpillar. Caterpillar. C-A-T. Caterpillar. No. Wasn't that quick? It should be that easy. Okay, the high, the low, where it was, where it is. Look at it. Down, up, down, up. Well, it's not finished going up yet. Now, it may continue going up. Great for whoever owns it. I just don't want to be donating to whoever, got in before me. So, in short, I don't buy at the high. So, Caterpillar, no. What else we got? Simone, how's it going? Dave, Jeff, what's going on? Eric, what's happening? Oh. All right, where are we? Caterpillar, we saw that one. Simone, there we go. Can you explain your strategy? Oh, Frizz, what's happening? All right, Frizz, I need to take a deep breath for this one. All right, you ready, Frizz? I invest in dividend stocks, specifically those stocks that have consistently increased their profits for at least 2 decades. That's 20 years. Now, if the company consistently increases profits every single year, that means it's a good probability that they're going to do the same thing year after year after year after year. In fact, most stocks increase just before the EX-dividend date. And knowing that and doing a covered call against it gives me a safe, predictable, consistent 1% every single week, using nothing but pre-qualified dividend stocks and weekly stock options. Hopefully that was good enough for you. Alibaba. Unfortunately, Alibaba has only given out dividends for the last 2 years. Bullish, bearish. Bito, how are you doing today? Jose, ignore him. Thank you. AVGO has been my money machine since 2018. Cool beans. Now let's throw AVGO. AVGO. I like the premiums. Those are nice premiums, they are. But look at what the stock is. I mean, don't get me wrong. What am I going to do with it? I don't buy at the high, and that's where it's at the moment. So for me, it doesn't make sense. So that's a no. This week, okay, if she pulls back, well, we'll take a look at it in a couple of months. Ooh, Nana wants to take a look at United Airlines, UAL. Enter. Ooh, interesting. High, low, was, is. Look at this. Up, down, up. Okay, 88.47. 88.47 would be 89. 365. Hell yeah, I'd do that one. Okay, so the numbers work. The chart's okay. Let's dive a little deeper into the chart and see what we come up with. All right, a year ago, we were at 45.61. We bottomed out at the beginning of August of last year at 37.22. Well, the high of the year was at third week of January, 116. Then she dropped TDS day. We all know what that is. And then look at the escalation from TDS day. Up, down, up, down, up, down, up, down. Oh, bummer. It's on the way down. So here's the thing. Why don't we keep our eye on it? Because I love the premiums. The numbers look awesome. So we keep our eye on it in maybe a couple of weeks when we find, let's zoom in a little closer so you can actually see it better. You can see it a little bit better. See, bottomed out here, shot up and pulled back down again. So you got a gap here, which eventually will fill, and then she's come down, and eventually she'll turn around and go back up again. Eventually. But not this week. Sorry, kiddo. Oh, down. What else we have? Ooh, what was that? PWR. Sounds like some power company. Qantas, hell no. 2 reasons. Hold on a second. Reason number 1, I don't do monthlies. The numbers just don't work for me. Okay? They just don't work. 18 July, 15 August, 19 September, 17 October, 21 November, blah, 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 blah. Those are months of the year. There's only 12, which means I'd only get 12 checks a year. Yeah, no, thank you. I wanted 52. Weekly, 52. Why not? All right, let's keep on going. Darling, hold my hand. All right. Thank you. Malediction. Malediction. Cool. Nana, good evening. Yep, you're welcome, Nana. Riot Shield God. The Riot Shield God. Ooh, that's the good one. PWR, we looked at that one. No dividends on UAL. Bobes, yes, I know that. But I was just asking and having to take a look at it. But you're right. It's because of earnings. Don't take the risk. Monroe, thank you for that. So, Monroe, what I usually say is rule number 1, doesn't make sense. Rule number 2, never buy something unless you do some good amount of research on it. I don't really say that about a rule, but that's what you should be doing. Okay? Remember rule 1, never buy something you don't want to hold on to the day you die. Something like that. What window of time is your chat? Nana, I'm terribly sorry. I have 6 channels going at the exact same time. And it's challenging being just me. I have a difficult time being me every day. But when I have 6 chats going at the same time, I can't get to everybody as soon as they say something. Hey, bro, candlesticks do binary option trading. No, I don't do binary option trading, but thank you. What do I think of Alcoa? Ooh, He wants to take a look at Microsoft. I like Microsoft. MSFT. Nope. Oh, that was quick, wasn't it? Alcoa AA. Ooh, got one of those. See that? 3 to 4 seconds. It's not that difficult when you know what you're looking for. What am I looking for? High, low. Where was it? Where is it? What direction is it going? It takes you 3 to 4 seconds to see that. It's yes or no. Okay, write down. That one's yeah. Yeah, I'll take a look at that one. Because I see right here what's happening. Eventually, that's going to find a bottom and turn around. I want to see what's happening now to see what it looks like. But before I even do that, I want to see, is it going to worth my while? You know, am I going to make my 1%? Great. Then I'll do it. All right. 28.56. The 29s, which is going for 92. Yeah, that's over 3%. Right off the top of my head, it's over 3%. So let's take a deeper look. Okay. So a year ago, here we go. Here we go. 38.12 a year ago. The high of the year was 47.77. And then she drops to TDS Day. Woohoo, April. To a low of 21.60, somewhere in that area. So let's go from there. So take a look at the pattern, because we investors, those who buy and sell, that's us, okay, we decide what's too high, we decide what's too low. So we make it go up and down, up and down, up and down. That's you and I. We do that. Yes, if we're buying, stocks go up. If we're selling, stocks come down. It's kind of weird how that happens, isn't it? Okay, so look at the pattern. Up, down, up, down, up, down, up, down. Look at the distance between the high and the bottom here. The high and the bottom there, high and the bottom there, high and the bottom there. It'll tell you when it's getting ready to turn. So today is lower. There's the fourth day to the downside. So what does that mean? It means eventually it's going to find a bottom and turn. It's going to do this. Find a bottom and turn around. Find a bottom and turn around. Find a bottom and turn around. That's all they do. They go up, they go down, they go up, they go down. That's it. Just buy it at the right time. And doing a weekly option, it's only 5 days. So it's not like I have to hold it for years. It's not like I have to hold it for months. 5 days. That's it. 80% of all options expire worthless. I know when the stock usually going to move, and one of the safest trading strategies there is. And it's as simple as follow the bouncing ball. Remember that? Oh, follow the bouncing ball. Oh, follow the bouncing ball. Oh, follow the ball. So on and so forth. You know what I mean? It's actually that simple. Remember, it was great for a 9-year-old. I thought it was genius that I came up with this so that she could feel included. It's like, Daddy, can you teach me? Oh, great. Here you go, honey. Never buy something that's not on the list. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And make sure the numbers work. What am I buying it for? What strike price am I selling? What am I collecting? Is it 1% or more? Yes. Is it the right time? Okay, they kind of go together. Just because the numbers work, if the chart says no, it means no. Now, if the chart says yes and the numbers say no, that's a no. It's not that difficult. 9-year-old, 10 minutes. Okay. Anyway, so defining moment in my life. Daddy, what are you doing? Can you teach me? So we have videos going back about 15 years. Seriously, we've been doing it that long. Okay, I have over 1,100 videos online, so check them out. If you're ever bored and you want to hear me over and over and over and say the same thing over and over and over again, yeah, there you go. All right, so anyway, Alcoa. I'm going to wait a little bit until Alcoa hits the bottom. As a matter of fact, I'm going to write it down for next week. I love Alcoa. It's a dividend king. Do you know what that means? 5 decades of consistent profitability. Every year, they more and more money. Well, if they've been doing it for 5 decades, well, maybe they'll keep doing it. That's the beauty of a well-oiled machine. SYTA. What the heck is Archer Aviation? Hell no. Microsoft. We looked at that one. We looked at Alcoa. Thank you. Can you look at HL? What the heck is HL, Chuck? Don't feel bad, Chuck. I say that to a lot of people. What the hell is that? Helka Mining. Why does something tell me this thing has no dividends? Oh, yuck. All right. Okay, I suppose I can live with it. All right. So let's go take a look and see if it does have dividends. Because if it doesn't, well, I missed out on that one. HL. You should, as a trader, you should have on a speed dial or, hit it now button financial website. If you're serious about investing, you need to have a good financial website and know how to use it. Know what you're buying. What's the book value? What kind of revenue do they have coming in? How many shares are actually floating out there? What are the profits like? That's when you find all that nitty gritty stuff. Me, I don't bother with those. I go straight to the cream of the crop. Because if they're consistently profitable for more than 50 years, I really don't care about that other stuff. Because every year they make more and more money. That's the beauty of the dividend kings, the dividend aristocrats, the dividend champions. It's not my list. Seriously, it's not. It's not like I'm trying to claim fame to them. I'm just saying I like the lists. Those are the ones I use. Anyway. Can you look at HL? HL. All right. Helica. Dividend. Oh, so they do have a dividend. Cool. May 23rd, 2025. Interesting, interesting. Okay, so let's look at some historical data. How many years of dividends do they have? 'Cause I've never heard of them. So they have weekly options. They have dividends, but how many? All the way back to 1980. Ooh, impressive. All right. Well, not so impressive. There's no numbers there. Oh, Paige isn't responding. Oh, what a bummer. How an inconvenient time for that to happen. It's not even popping up, dude. Well, that's not good. All right, let's go to the other website. All right, well, let's just take a look at it. Here's the high. Here's the triple bottom. That's nice, triple bottom. August, April, and in May. Right there. Down, up, down, up, down, up. Does the same thing. Every other stock does the same thing. Okay, so what's the next 30 days look like? Where do I think it's going to be by Friday? Well, let's take a gander. Let's take a gander. All right, 16. Okay, here's the last 30 days. Down, up, down, up, down. So basically, we can see the 30-day bottom, the 30-day top. Call it whatever you want. Bottom, top, okay? Profit taking, accumulation, appreciation, inflation, whatever you want to call it. It went up. Okay, now it's 2 days to the downside. So when it finds a new bottom, maybe, might be an idea. Maybe. I'd like to see more information on it, but I'd never heard of it. Oh, which trade do you do? Bump. Samuel, yeah, like today, the fact inflation didn't go up or down made U.S. Okay, well, whatever. Not doing that. I don't do that either. Lovely. Okay. M, what's going on? Can we look at Riot? Steve-O. Oh, Skivo. S-Y-T-A. What the heck is S-Y-T-A? S-Y-T-A. Yeah. Got me on that one. Riot, R-I-O-T. Oh, looks like a little bit of a pullback today. I don't know. Up today. Huh? High, low, is. What's the direction? Up, down, up, down. Which way does the river flow? What direction does the path turn? Whatever analogy you want to use. Whatever analogy you want to use. Okay, so a year ago, where are we? Right here. A year ago, we're at 12.11. Now, the high of the year was back in November, 11.11. That was 1587, the high of the year. The bottom of the year, look at this. We have some good support here. 16. 1, 2, 3, 4, 5, about 5 times. That's your bottom right there. They call that support. Anyway, so from there, she shoots up just over 13. So let's take a look at the last 30 days. Last 30 days. Here we go. This gives us a good idea. Well, it gives me a good idea. Where do I think it's going next? Okay. Down, up, down, up, down, up. It's in that upward trend still. And it has that repeatable pattern. Now, is it guaranteed? No, it's not guaranteed. It's nothing guaranteed in life except for 3 things. And I bet you know what 2 of them are. Anyway, let's keep on going. So that's Riot. Now, I do own some Riot, just to let you know. I'm not trying to sell anyone on anything. Okay, get that out of your mind. What do we have next? HL we looked at. Staya we looked at. NE. NE. Noble. NE. What the heck is NE? NE. Hell no. Sorry, Teehee. Thoughts on Yield Max? Is that YLD? YLD. No. That ain't it. I don't know what Yield Max is because I don't trade it. Oh, it's moving. Let's avoid it feeling high. Blah, 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 blah. Okay. Cool beans. Okay, I just broke up. Okay. Yield Max. If you give me the ticker symbol, that might be a little helpful. Tyler, ACHR. Isn't that Archer Aviation? ACHR. Yeah. I just want to say no to you, okay? Archer Aviation is not on my list. Okay. Down, up, down, up. Last 30, yeah. Let's zoom into the last 30 days. Right there. What do you think? Last 30 days. Look. Here's your bottom. Here's your top. I don't buy it at the top. It just doesn't make sense. I've never ever heard anyone say, hey, let's buy this thing high and wait for it to go higher. No, nobody ever says that. Let's buy it high and wait for it to go higher. No, buy low, sell high. All right. SYTA, where you looked at it, it's a no. Any, I looked at that. You're collecting. Hold on, I just missed that question. All right. Groucho, you're collecting the premium as well as the dividend. Groucho, I prefer not to collect the dividend. I just want to get to where the stock is going up before the dividend is paid. Remember, I don't buy it before, I buy it 2 weeks before the dividend date, because just before the dividend date, the stock moves up. So as the stock's moving up, I want to jump in, take advantage of that little push to the upside, do a quick, safe trade, jump out, and then not go, because once the dividend is paid, the stock tends to go down, and that's not where I want to be. Okay, I like to go with the flow. Jim, what's your yearly returns? Joey, this year it's going to be, I got a feeling I might hit triple digits this year, because I'm up over 70% in one account already, and we're only in July. It's freaking crazy. I've never seen numbers this crazy before. I've been doing this for a long time, but for some strange reason, the market seems to be a little bit more generous this year. Please check Intel. Katie, how are you tonight? Intel, INTC. Interesting. Let's take a quick gander. It's the high of the low. Where was it? Where is it? Look at this. Down sideways. 2269. Did we take a look at this yesterday? I think we did. Look at your last 30 days. Okay, now we're watching this yesterday. Same thing. Okay, 30-day bottom, 30-day top. Now it's coming down. So we're going to keep our eye on it. I actually have it written down for 2 weeks to take a look at it in 2 weeks, because hypothetically speaking, that thing has quite a ways to come back down again before it's reasonable, in my opinion. Okay, that's just my opinion. Okay, don't take whatever I say to heart. I mean, that's just for me. That's my opinion for me. Not for you. I don't give advice. Okay, don't think of it as advice. Just think of it as some guy on YouTube pointing at numbers. TQQ. I can't believe you're asking me that. Oh, that's right, Mitch. You're relatively new. Hold on a second, Mitch. 2 in, 2 out, 1 free. S-bet. What the heck is S-bet? S-bet. I'm Mrs. S-bet. Wait a second. S-bet. S-B-E-T. Yeah. Nope. Wrong. S-B-E-T. Hell no. Come on. Look at this. How can this thing possibly have 2 decades of increased profits? Now that's weird. It goes from, was it like 5 or 6, and it shoots up over 120? Why? Sharp link. Never heard of it. Sorry, I'm not looking for flashy stuff. I'm not looking for stuff like this. How often does that happen? Okay, I've never hit it. I made a couple of mistakes once, so it, favorably in my favor. I made mistakes that went in my favor, which is good. Sometimes it's a good thing. All right. Anyway, S-bet, no. Intel, we already looked at. Tesla, I don't do Tesla. Well, let's look at TSLA. I'll look at it for you. TSLA, and I'll tell you why I don't do it. All right. Down, up, down, up, down, up. Okay, so that's the motion. That's what it's doing. I don't do it because they don't have dividends, which means now I'm going to have to go in and look at 20 years of annual reports. And then I'm going to look at the charts and figure out where the patterns are. Because without a dividend, there's no beacon, there's no light, there's no signal, there's no flashing red light saying, hey, this is here and this is what usually happens here. Okay, so I don't usually do dividends because they don't share profits. And I'm not looking for capital appreciation. So if you're looking for a stock to go from here to here, you're in the wrong place. That's not what I'm looking for. Okay, this is a very small niche. We do one trading strategy and only one. Well, because it's safe, it's simple, it's easy. Why make things complicated? If it works, it works. Anyway, so Tesla, I don't do Tesla because they don't have profits. And it's hard to judge where the stock's going to go next because there's no dividend to tell me when to start looking at it. There's no predictability and consistency of the movements. How's that? Yield max. You got to give me the ticker symbol because I don't do yield max and I have no idea what it is. Now, Halliburton and Ford, huh, Tony? Well, let's take a look at some Ford. Not this week. How's that? That was quick, wasn't it? Okay, here's your 30-day bottom. She shoots up, pulls back. Okay, it's going to drop. Look at the run-up from 10 to 12. Now, you think 10 to 12 is a small amount of money. Well, it is, but 12 cents is $2 more than 10 cents. I know it's really elementary, isn't it? $2. Big deal. It is a big deal because $2 on a $10 stock is a 20% move. You got to learn your numbers. It's not that difficult. That, my friends, right there is a 20% move. 1, 2, 3 weeks, 20%. Hell, I'm taking profits. What do you think? It's going to come down. And when it's done coming down, what do you think it's going to do? Turn around and go back up again. So Ford is on my list for 2 weeks from today. Well, in 2 weeks, we'll look at it again because that's what it looks like. That back in the 1970s, Rod Stewart, every picture tells a story, don't it? Every picture tells a story. Here's the bottom, here's the top. Now it's coming back down, and about another week or two, will be ready to pick. It's like a vegetable garden. Every week it'll be something new will be ready to pick. Well, next week, 2 weeks will be Ford. Okay, so Halliburton. Okay, Halliburton. I have some Halliburton, just to be open and honest. It's down today. Yucky, yucky, yucky. So let's take a look closer. Because right now it's at 21.24. High low is look at the motion. Down, sideways. Great. What is it paying? 21.24, the closest strike price. We got two of them, the 21 and the 20.50. It's kind of like in the middle between the two. So this is where you choose. Do I want the safer one, the 24, or do I want the one that has a little bit more money, the 24.50? It's a personal choice, something you got to make. Flip a coin. Take a chance. Who cares? It's only money. You can't take it with you when you go. Anyway, so 21.42, the closest one's going to be the 21.50. It's paying 54 cents per share. That's over 2%. Let's see what it looks like. Yeah. All right. High, low, we've seen all that already. Let's take a look at the numbers. Put in the numbers. Let's see the numbers. The high a year ago, 37.13. The bottom right on TDS day, right there, second week of April, 1880, somewhere in that area. Look at the pattern. It like jumps out at you. Up, down, up, down, up, down, up, down, up, down. So we see the pattern. Well, where's it going to be? Well, it looks like it's coming down some more. Well, let's zoom in a little closer. Get a little closer. Now don't be shy. Okay, up, down, up, down. See? In a couple of days, so we're going to have Halliburton on the list next week because profit taking, accumulation, whatever, down, up. Okay, now it's coming back down again. When it finds a new bottom, I want to see it. Next week, I want to keep my eye on it. So I'm going to make sure Halliburton's written down for next week. It is now. All right, I'll take a look at Halliburton next week. Because I like Halliburton. I already own some, so I wouldn't mind picking up some more if the numbers work. Well, what are the numbers right now? Well, the 21.24, the 21.50 is going for 54. That's over 2%. Now, do you understand 2% every week? You're doubling your money in 1 year. I'm terribly sorry if it takes 5 or 10 minutes every day. I mean, you brush your teeth every day. Well, just one more routine in the morning. Okay, so you got to get up 10 minutes earlier. Is it worth it in the long run? Because think about it, when you get my age, when you hit retirement, okay, 1% of your nest egg for 1 hour of work. Now, if I have $100,000, 1 hour of my time is worth $1,000. 1% of whatever your nest egg is. But if you're not retired yet, you probably have a smaller amount. Don't be impatient. Okay, Friday's coming. I can do a trade every single week because the only stocks I look at are those that have weekly options because it just makes sense. If I buy it for this price, $21.42, I sell it at $21.50, I get 54 cents. Do I care if the stock goes up? Nope, because I make my 50 cents. My 54 cents, sorry. Okay? Do I care if the stock goes nowhere? No. Do I care if it goes down? Yeah, just a little bit. Because now I have to hold it a little bit longer. But remember rule number 1. Never buy something you're not willing to hold on to long term. All right, so let's take a look at what if it goes down? So take a look at the premiums. They go all the way down to 1 strike out of the money, 2 strikes out of the money, 3, 4, 5, 6, 7. 7 strikes out of the money and it's still paying something. Now look at the old way. People buy stocks and they collect the dividend once every 90 days. So if you go in with that intention, I'm going to buy this stock and collect the dividend every 90 days. But you got that evil twin saying, yeah, let's do that. Let's do some covered calls and get weekly cash flow on it. Kind of like skimming off the top, as the mobs used to do. Skim a little off the top. Same thing. We're just doing it legally in the stock market. So you get those questions nagging on your head. Does it make sense? That's number 1. Number 2 is, do I like Halliburton? Because think about it. You should never buy something that you don't want to own long term because you just might have to. Because stocks go up, they go down, they go up, they go down. And do we know what's happening tomorrow? No. What would the fun of that be? Every day's an adventure. Tomorrow's a new day. What's it going to happen? Well, it's either going up or it's going down, but it looks like it's going down. Okay, great. If it looks like a monkey, wait a second, that's not right. If it quacks like a duck and looks like a duck, it must be a duck. If it looks like a monkey and acts like a monkey, maybe, all right, never mind. Got lost on that one, didn't I? All right, Halliburton. Not this week, but maybe next week, Halliburton. Changing of the seasons. What do you mean changing? It's July. Anyway. Comcast, CMCSA, Comcast. Incorporated in the 60s, got over 60 million customers. Can you imagine it? Over 60 million customers, writing them a check every single month. Oh, why don't you own some of this? Holy cow. 60 million customers. All right, anyway. High, low, was, is. Look at the motion. Up, down, sideways, 34.40. Awesome. Okay. 34.40. So the 34.50s, that's the closest one. 34.40, 34.50. It's right there. It'll tell you what ones are available. 31, 31.50, 32, 32.50, 33, 33.50, so on and so forth. It tells you right there. It's easy. Current price, 31.40, 34.40, 34.50, 52 cents. That's more than 1.5%. Well, more than 1.5% is like 80% per year. I think I can live with that. It's only 10 minutes a day. The 10-minute trader, cool beans. Anyway, so Comcast, let's take a closer look. It's going to be a no, only because I just peeked out the corner of my eye and I saw this. Okay, 30-day bottom, 30-day top. Here's your profit taking. But here's the thing. There's a bottom there soon, tomorrow, next day. For me, you got to decide for yourself. Okay, you've got to decide how many days to the opposite direction is it safe for you to jump in, because you don't know if that's the bottom. Terribly sorry, you don't know. Nobody knows if that's the bottom, because we're going to wake up tomorrow, we'll jump in the market, and who knows, it might go down tomorrow. It might turn around. But do you like, so you always come back to that question, do I like Comcast? Well, I love Comcast, I do. Okay, it's why I usually buy it over and over and over again. Okay, do I like Comcast? Do I like it at this price? Is it profitable? Am I going to hold on to it until it hits my target? Oh, what's my target? Well, it's 34.40. My target's only 34.50. It's not that difficult. It's just like right around the corner. But if I did the 34s and the stock is currently at 34.40, that's a safer trade. Still making my 1%. I'm not making 2%, but I am making 1%. So here's the thing. Look, if I did 34.40, right, and I sold the 34s, right? Now, I understand I'm losing a little bit, but you take that off of this amount right here, because it's giving us 75 cents. So we're losing 38 cents, but they're giving us 75. So you take that from there, and then you figure out what your profit is. Great, it's more than 1%. But here's the thing. The stock's going to be three different places, okay? It's either going to be higher, the exact same, or lower. We'll check it out. If it's higher, I win, get all my money back. If it's the exact same, I'm talking about on Friday when the option expires. If it's the exact same, I make all my money, get all my money back. It can even go down a little bit. As long as it is above 34 come Friday, I will get all my money back because it will have hit my target. Now, I could roll it into next week, pick up a little bit more money, but that's a different conversation. But simple, safe, predictable, consistent 1% a week. It's really not that difficult. Anyway, shall we call it an evening? It's 11:32. Hey, James, I left my career in banking, have 16 years of trading experience, and became a successful day trader this year. No derivatives yet, but wanted to let you know I joined and listening. Hey, cool beans. How am I doing? Anyway, I don't really communicate very well with people of authority. I had banking rules previously. Feels great to be free. I bet it does. All right, Joey, we already talked about that. Mitch wants to take a look at TQQQ. All right, Mitch, I don't like TQQQ. Let me tell you why. Here we go. You ready? TQQQ. Couple of reasons. Reason number one, it's kind of on the high side at the moment. It's slowing down a little bit right here. But when she goes from 35 to 85, that's a $50 increase. So jumping into it now wouldn't make any sense because between here and here, it's screaming take profits. Because here's the thing. If you don't take your profits, well, number one, it's not a profit. Think about it. It looks good on paper, but until you cash it in and say, hey, I'm taking my marbles and I'm going home, until you take that profit, it's not a profit. Number two, nobody ever went broke taking profits. Take your damn profits, say thank you very much, and come and play back another day. Anyway, it may be great, but it's a little out of my reach. But that's only one thing. I have another problem with TQQQ. I do. Hold on. I had banking rules previously. Okay, good. Think of the bouncing. Yeah, think of the bouncing ball. That's funny. All right. So let's go take a look at Yahoo Finance. And I'll explain why I don't like TQQQ. TQQQ. TQ. All right. TQQQ. Oh, come on. Looks like we have no Yahoo Finance. Bummer. Oh, there it is right there. Okay, Pro Shares Ultra Pro QQQ. TQQQ, that's this ticker symbol, 8507. Okay. Now, I want to take a look at the dividends in which this thing pays. So I want to click right here. Okay, it's being a little stubborn. Come on, come on, come on. What's taking you so long? What's taking you so... Really? Damn. Can't make a good point if the computer's slow. Is it the computer or is it the internet? I don't know. It's got to be one or the other. Just got a brand new computer today. I think I already said that earlier. That ought to be nice. This one I've had like 5 or 6 years. Beat it up really bad. All right, I can't see it. What I was going to try to point out is the consistency of the profitability. How consistently has TQQQ increased its dividends? Now, I've looked at it before. It's been a while, but they haven't increased it consistently enough for me. I'm very picky at the stocks I like to buy because I want to make sure that they're safe and they're predictable and they have longevity to them. Because I know I'm not going to be around forever. I want to make sure that my children, when they inherit whatever it is I'm creating here, when they inherit everything, I want them to learn how to use it, how to do it. All right, anyway, let's see what else we got. Sorry, Mitch, I can't really show you TQQQ why I don't really like it because the numbers just don't look good to me. But hopefully next time I'll be able to see it. I don't know why it's not looking at it today. How do I get into the morning live trading class? Joey V, how are you doing, brother? Joey V, the easiest way to get there is to go to the bio, okay, top left corner of your screen. Click on that and just follow the bouncing ball. Go to the website and it's right smack dab on the very first page. It says live trading. All right, what else are we doing? PGR. What is PGR? Anybody know what PGR is? Uh-oh. Joey V. Joey V, you've been here long enough. You know what I'm going to say about Misty. You've been here. What am I looking for? PGR. PGR. What is PGR? Oh, progressive. Okay. Interesting. High, low, was, is, up, down, 246. So we're looking at the 250s. Oh, wait, no, we have a 245, and that's 320. The 247 is 250. Yeah, so either one of those is going to give me over 1%. Great. Looks good. Let's take a closer look at the chart. I don't have my tea tonight and affecting my voice. It's just water and honey. Anyway, let's take a quick look. A year ago was the bottom. We actually have a double bottom mid-July and beginning of August last year at 207.91. Shoots up, hits a high in the middle of March at 290, 299. Let's call it 293. Come on, 299. Wait a minute. 292.99. Let's just call it 293. All right. From there, she drops back down again. So look at what we've been doing for the past couple of weeks. Okay. Down, up. Look at this. Down. Finds the bottom yesterday. Today is 1 day to the upside. Oh, that's 1 day to the upside. Me, I like 2 days. And then I will jump in on the third day. Gotta have some rules. That's my rule. Okay. You guys gotta figure out what's right for you. I'm just letting you know what my rules are. All right. I'm going to write that one down, PGR, for next week. Nice. All right. Lisa, Bunk. Now, I'm not quite sure if that's like a petty joke or something. BONK. Yeah, it is. Thank you, Lisa. DRI. No. Now, the reason why I'm so quick to no on DRI, I don't do monthlies. The numbers just don't work. I say that every night, at least 2 or 3 times a night. I just don't do monthlies. The numbers just don't work. And at least 2 or 3 times a week, somebody always challenges me. It's like, show me. They just don't work. For me. Okay, I'm sorry. They just don't work for me. I want 1% every week, not 1% every month. 208.25. That's the current price. But we're not going to do that one because I don't do monthlies. Sorry, dude. No to DRI. Ooh, Teehee wants to take a look at I was going to say Hummer, but Humana. HUM. Now, I do own some Humana, just to let you know, and it's a little bit on the downside. But anyway, take a look. High, low look at the motion. Down, sideways, 226. So it's at 226 at the moment. 226 right there. Ooh, 650 at 520, 420, 330, 260. Wow, all the way down here and still over 1%. Awesome. I love it when it looks like that. So yeah, the numbers look good, but what doesn't look good? Well, actually, it does look good. Depends on how you look at it, I suppose. All right. 30 days ago, up, down. Look at where we are now. It kind of looks like she's slowing down. Kind of looks like she's slowing down. Remember, find the bottom, 2 days up. So today could be the new bottom. So tomorrow, 1 day higher. Friday, 1 day higher. I might be jumping in on Monday because the numbers look pretty damn good. Okay? Thursday higher, Friday higher. I'm jumping in on Monday. If it goes that way. Do we know? No, we don't know. Are we guessing? Hell yeah. But I want all the odds in my favor. So I stick to a trading strategy that's simple and safe and predictable. Sorry, it's not glamorous. It's boring as hell. It's the same stocks over and over and over again. You can look back at the videos. I got over 1,100 videos. Go all the way back like 10, 15 years ago. Oh, he's buying the same stocks. Because it works. If it ain't broke, don't fix it. Anyway, so there you go, Humana. If you like it. It always comes down to that question. Does it make sense? Do I like it? Do I like it at this price? Am I willing to buy it and hold it? Does it make sense? That's a good one. Does it make sense? Oh boy. And I still sound like a salesman, don't I? Should I sell you something? Well, step right up. If you act now, you get 2 for the price of 1. Yay! All right, anyway. So that's Humana. What do we look at now? Sell stock if it's down. No, Kevo, I never sell stock if it's down. If you get even from premiums, cab you. Cab you? What does that mean, Kevo? Yahoo not loading. No, I saw that. Is that different than the QQQ? It's kind of the same. You know, they all travel on the same short bus. How's that? They all travel on the same short bus. I don't like QQQ either, because there are so many other opportunities out there. Now, the Qs are great for those who want less involvement. But, you know, less involvement, less profits. Isn't that weird? You put time and energy in, and then you get money and profits out. Well, that's weird, isn't it? Imagine that. Dividend is 1.4%. Cool beans. DJ. Is it wrong to do calls in Webull, or should I be using Fidelity or something? Okay, Brian, I really can't give you any advice only because I have no idea who you are, what you're looking for, risk factors, goals, age. I don't know anything. Okay, so I really can't tell you what is right and what is wrong. All I can say is what I would do in that situation. But then I'm looking at it from where I'm coming from. All right, I'm 61. I don't have the luxury of being wrong, so I want everything I do to be safe and predictable. I'm just sharing with you guys because I need 2 years of verifiable information. Here it is. We're almost there. ARM. Cosmic Souls. ARM. What the heck is ARM? ARM. ARM Holdings. Okay, well, let's check it out. Okay, high. We got a double high. July and January. July and January. Okay. Up. I'm sorry. Down, up, down, up, down. What's going on here? Looks like she's turning around right there. That looks kind of cool. But before I take a deeper dive into it, let's check and see, is it going to be worth my time? Right? Current price 153.90. Oh, come on, we all know that one. 154. The 150 doesn't have a 154. It's got a 152.50 and it got a 155. Well, the 155 is going for 435. That's over 2%. That I know. Simple. It's over 2%. Great. Let's take a deeper look because that looked interesting right there. All right, so alrighty, a year ago we got that double high, yeah, at 181, almost 182. It's down, up. Look at this, high, high, double high. All right, cool. Came down. Here's the low. Shot up. Let's take a look at that area. Hey, take a look at that. TDS day. Right there. TDS day. Shoots up, pulls back. Look, 2 days to the upside. Zoom into that. Get a little closer look. Oh, I forgot to tell you. I did. Isn't that weird? I forgot to tell you. This screen is live on YouTube. So if you can't see these little tiny numbers on your phone or your iPad or even on your laptop, yeah, you can go in the other room. Turn on the big screen TV and pull up YouTube. I'm actually streaming live. Anyway, all right, so let's keep on going. I want to zoom in a little bit closer to see, because that's what I'm looking for. Let's see, right here. Now, this is not a tip, okay? I don't give advice, okay? I always tell people, never listen to me. Never listen to anybody online. What the hell do we know? Anyway, Jacob was over tonight. That's my excuse. Jacob came over. All right, so here's the bottom 30 days ago. Shoots up. Look, for 137 to 167, that's $30. Well, I know $30, but it's a $137 stock. $30 move on a $137 stock. Well, that's over 20%. Well, yeah, there's going to be profit taken. There it is. And look at here. There's the new bottom right there. How can I tell? 2 days to the upside right there. Tuesday and Wednesday. Now, if it opens to higher tomorrow, that is my signal to get in. You guys can copy my signal if you want, but you have to figure out what's right for you. I like 2 days to the upside. The third day, if it's higher, I will jump in. That's my cue. You guys find out what's right for you. So anyway, the 153.90. All right, so the 155 is going for 430. So let's do a practice trade so you can see how it works. And then you can compare the numbers. And then you can ask that nagging question. Does it make sense? Isn't that a cool question? Does it make sense? All right, so let's get out of there because we already decided we're going to do the 550s. Now, I love Thinkorswim because it changes everything for me to click it a mouse. It's cool. Now, I said the 155s right there. Here we go, 155. Yay. Now, I'm only going to do one contract. Okay, now it's a sample so you get an idea of what it sounds like, what it looks like, and how to equate the numbers, how to do the math. All right, so one contract. Okay, here we go. Now I'm going to buy it at the market because first thing in the morning it will get filled. So 9:31, I will buy it and sell it all before 9:31. Imagine that. Okay, so or before 9:32, whatever. So, let's hit confirm and send. Now you hit confirm and send once. Do not hit it a second time. Seriously, most newbies, most people just getting started, they lose money hitting the wrong button. That's a weird thing if you think about it. I'm an adult, I'm not going to do that. Yeah, you will. I said the same thing. As a matter of fact, this morning I hit the wrong button. I didn't lose anything this morning. A couple of weeks ago, I lost $2,500 by hitting the wrong button. Wrong. Ah, shit. That's exactly what I did. Ah, shit. Anyway, it happens. Get used to it. It's kind of like that go to jail card in Monopoly. You know it's there. You know it's going to happen. It's, shit, when it does happen. Okay, so anyway, here's the trade right here. Buy one covered call ARM 100. That means it's the weeklies. The 25, July 25. Well, that's July 25th, 2025. That's next Friday. The option expires next Friday. The 155 call option against the ARM stock at the market to open to open. That's the order right there. To open to open. It means I'm buying the stock and selling the option all at the exact same time. So remember when I said simple, safe, predictable? Remember that? Simple, safe, predictable, 1% a week. I already know what my profit's going to be before I even do the trade. Most people, when they say, I know when the stock's going to move, good, they buy the stock. Why? Because then you have to wait for it to sell. You have to wait for it to go up before you can sell it. Well, a covered call, I don't have to do anything. I know what my profit's going to be, and the stock doesn't have to move at all. That's the beauty of a covered call. Okay, so $552.50 is the profit. See, maximum profit. It tells you what my profit's going to be before I do anything. I love predictability. I love consistency because you know what? We're going to get to that in a second. So, 552 is my profit. How much is it costing me? Or how much am I investing? That's a better question. How much am I investing? Because I'm expecting a return. So if I'm expecting to lose, it's how much is it costing me? That's kind of like, how much am I losing? No. I'm investing. How much am I investing? Okay. 14,948. It's almost time for me to go. You hear the voice? It's going. That's why I have that tea every night. I don't have my tea tonight. All right, calculator. Here we go. Let's find out what the rate of return on this trade is. 552, 552 and 50 cents. Gotta throw that 50 cents in there. Okay, that's the profit. 5 per contract. So you get one contract, 552. 2 contracts, 552 times 2. That's what it is. All right. 3 contracts, 4 contracts, whatever you can afford, because we're all different. Maybe you can afford 1, maybe you can afford 10, maybe 132. I don't know. We're all different. All right, so 552. To find out what my rate of return is, I got to divide it by how much I'm investing. 14,948. Okay, 14,948. There you go. And 3.6. You see that? 3.6%. Well, I like that number. Can you imagine that 3 point? No, I'm getting excited because I'm retired. I'm not. You know what? You go on the baseball field, baseball diamond, right? I'm the guy bunting or going for singles. Terribly sorry. It works. All right? Ain't flashy. Terribly sorry. But you know what it is? It is safe. It is simple. It is predictable. And it is consistent. Terribly sorry. It's only 1% a week. Sorry. Yield max is likely misty. Yep, I got it. I don't like misty. Slow and steady. Thank you, Thomas. Slow, steady, boring. Does the premium get credited immediately or at expiration? It takes 2 days to settle, which means it'll show up in your account today or the day that you do it, but you won't be able to spend it until the next day. Oh, boo-hoo, you gotta wait a day. For the most part. Anyway, I actually have a credit card, a debit card, and a checking account attached to my trading account. So I can write a check against my trading account. Well, that's where all my money, well, most of my money is there. Well, why not? That's where I'm making my money. There. Why keep it in the bank? The bank's not giving me anything for it. At least I can make 50% per year in my trading account. And considering I do it every week, I have a good idea of what I have coming in every week. And you know what? I'm 61. I know when my bills are due. Okay? I know what my electric bill is. I know all that stuff. It's beautiful being on the other side. It is. Wait till you get here. It's fun. It's wonderful. Kind of boring. I wake up and say, aren't I supposed to be doing something? Oh, yeah. No. It's weird. I'm still not used to it. And it's going on 2 years. Going on 2 years. And it's like, I still feel like I should be doing something. But I don't have to. Anyway, it's a wonderful feeling. Anyway, so let's call it a night. My voice is getting, going bye-bye, so we're going to call it a night. All right, who do we have here? Gail, good evening. I'm just getting ready to go, Gail. Sorry. Anthony, what's happening? Drazik, what's going on? All right, lose it. Okay, all right, look at that one, Lucas. All right, Monty Clyde. All right, Joey, I already told you how to do that. I'm new. How about NU? Ooh, new core. Sorry, TD Ranch. I'm getting ready to go. My throat's going bad tonight. Walmart. We'll take a look at it tomorrow. Sorry. I'll keep that in mind. All right, 100%. Wonderful, wonderful. Would you appreciate thoughts on NU? TD Ranch, can we do that tomorrow? I'll be back again tomorrow night. Okay, what else do we have? NU, got that one. Lizzie, good evening. Yep, have a nice night, Lizzie. Sweet Dan, good night. Hey, La Playas in the house. Club Med Tom, good night. All right, so we're out of here. Bye, you guys over here. Gotta say goodbye to everyone. Goodbye. Good night, sweetheart. Well, it's time to go. Go. Good night, sweetheart. Well, it's time to go. I hate to leave you, but I really